Good evening, everyone. Time for another silver update. This is the 30-minute chart provided by netdania.com. You can click on the link below. And as you can see, this downtrending line that I had here with a series of touch points where we just touched again on Friday. A nice little breakout here right on the open Sunday evening. So I did not really expect that, but that's an interesting surprise. If we move in quite a bit closer, we can see it breaking just above there, seemingly wanting to move higher. So, did I manage to catch a bottom with my buy of the dragons down around in here? I'm not sure, but it just felt like a good buying point. Speaking of that, as you know, they're out on AppMax, but I did happen to find them today on Gainesville Coins. Now you can see here they're a little bit higher. They're actually $8 over spot here, so that's pretty pricey. But for those who didn't get in and wanted to piggyback me, didn't get in on AppMax, you can get in on Gainesville. Now, I did try to determine how many are left, and I just put in a really big number, and I ended up getting this message saying that only a max of 1,500 can be purchased per order. So I can't say for sure whether or not that is just a max per order that they've set. I guess I could go back and try to do a different coin here, but I don't really have time. So maybe one of you can do that. They do have those Dragon half ounce over there at Gainesville, though. Over to the blog real quick. I've taken quite a bit of heat from people regarding this phony coney thing, and the last few posts on the blog have been on it. This story is an excellent story. It's an expose of AFRICOM. It comes from Siebel Edmonds' Boiling Frog blog, and that's a very good expose of the real reasons behind it. Here's a gal who's Ugandan herself and doesn't buy into it. And of course, this is the one that was the most controversial. An expose of Jason Russell, whom, as you all know, kind of lost his mind and ran around naked on a street corner, allegedly masturbating, and etc. So that remains to be seen how bad that was. But it is on film. You can watch this as an expose. Of course, the liberal left media is, of course, trying to cover for him. A lot of people have speculated, did his programming snap? I don't know. The guy supposedly was a Christian. Never seemed like a Christian to me. He just seemed like a fake from the very beginning. So, possibly another PSYOP plant by the powers that be. Probably so. The video at the very top of the blog is Mind Control, America's Secret War. Probably ties in with that story. The CIA and others have a long history of attempting to control people with mind control, drugs, and various other things. So, very interesting documentary from the History Channel, and you should check that out. Now I'm going to go to a question of the day real quick, but before I do that, on the forum, I did want to point out for those who are Christians, I did add a forum here. There's some controversy about this is originally a Christian forum and then it became other religions. So what I did was I broke out a separate forum for Christianity here. And then Bible questions, I have actually done my first video here on Bible questions answered. So if you're interested in that, you can go over to the forum and watch that. Now, the question of the day I want to talk about real briefly. This one's on bonds, and the question is, John, if 10-year or 30-year U.S. bonds will rise to, say, greater than 10%, say, in the next few years, would you buy them? If yes, why? And if no, why not? Thanks. Interesting question. I've mentioned before that my family back in the early 80s ended up purchasing a bunch of 30-year and other bonds around 20% as investment. Turned out to be excellent investments. Just to think that you could lock in a 15 to 20% interest rate for the next 30 years is absolutely mind-boggling. The idea that you could return nearly a fifth of your money every year, year after year. That's a retiree's paradise as opposed to what we're living in today, which is a retiree's nightmare, where it takes you $1 million to barely even scrape by on your interest money. So the question, would I buy the bonds if they hit that interest rate? Probably not. And the reason why is they kind of did sort of stick save on the economy by stopping inflation, raising rates so high. But as you know, they began to run up the debt at that point astronomically. And I just don't see a way out of it. I may be wrong. They may be able to save it again in the same way. But I just don't see a way out of it. And what I foresee this time is that rather than top ticking the bonds as far as the rates are, you would probably end up just chasing after it, because what would happen is the rates would go to 10 and then 20 and then 30 and then 40 and then 50, and you have a hyperinflationary blowout. And the bonds that you buy end up being essentially worthless. So really, in my opinion, the only investment out there that is worth investing in is physical gold and silver. And of course, I side to the physical silver side just because it's so much rarer than gold above ground, and it's just so undervalued with the ratio at around 50-1. So I personally have a lot more silver than I do gold, and I'm not really interested in accumulating any gold at this point, but I'm always looking for better prices on silver. So wanted to cover an interview real quick. This is over on Lou Rockwell's site, and it's an interesting interview with Doug Casey. It's called The Illusion of Recovery. I'm going to read a little bit of this. It's too long to cover the whole thing. And I'll start with the first question here. Doug, the so-called recovery, excuse me. Doug, the so-called recovery is looking more than so-called to a lot of smart folks, even to our own Terry Coxon, who says the recovery is real, albeit weak. Doug. Terry's probably looking at it by the numbers, some of which are reported to be improving, but let's come back to the numbers and start with the fundamentals later. The first order of business, as usual, is the definition. A depression is a period of time in which the average standard of living declines significantly. I believe that's what we're seeing now. Whatever the numbers produced by the politicians may seem to tell us. Question. I was just shopping for food and noticed that the bargain bread was on sale 2 for $5. My gas costs almost as much per gallon. That's got to hurt a lot of people, especially in the lower income rungs. I don't need to ask. A number of family members just got a job that pays $12 an hour, about 3 times what I was making when I made working for the University Food Service back when I was in college, and it's not enough to cover his rent and basic bills. If his wife gets similar work, they'll make ends meet, but woe unto them if anyone in their family crashes a car or requires serious medical treatment. Doug. That's just what I mean. Actually, the trend towards both partners in marriage having to work really started out in the early 70s after Nixon cut all links between the dollar and gold in August of 1971. Before then, in the Leave It to Beaver era, the average family got by quite well with only the husband working. If he got sick or lost his job, the wife was a financial backup system. Now, if something happens to either one, the family is screwed. I think from a very long perspective, historians will one day see the 60s as the peak of American prosperity, certainly relative to the rest of the world, but perhaps even in absolute terms, even taking continued advances in technology into account. Maybe the '59 Cadillac was the bell ringing at the top of that civilizational market. My friend Mark Trotter, president of Everbank, was just telling me that the net worth of the median U.S. citizen is only $6,000. That's the median, meaning that half of the people have less than that. Most people don't even have enough stashed away to buy the cheapest new car without going into debt. It used to be that people bought cars out of savings with cash. Now they have to finance them over at least 5 years or lease them, which means they never ever have even that trivial asset, but a liability in the form of a lease. The bulk of the 49% below this guy don't even have that. With the concentration of wealth among the top 1%, Most of those below average have seriously negative net worth, at least compared to their earning capacity. In other words, the US, Europe, and other so-called first world countries are in a wealth liquidation cycle that will be as profound as it will be protracted. By that I mean that people are on average consuming more than they produce. That can only be done by living out of capital, consuming savings, or accumulating debt. For a time, this may drive corporate earnings up and give this dead man walking economy the appearance of returning health, but it's essentially, necessarily, and absolutely unsustainable. This is an illusion of recovery we're seeing, the result of our wrong way Corrigan politicians continuing to encourage people to do the exact opposite of what they should do. Which is, Doug, save. People shouldn't be getting new cars, new TVs, and new clothes. They should be cutting expenses to the bone. The Obama administration, just like the baby Bush administration before it, there really is no great difference between the evil party and the stupid party, and its minions in the US and its cronies around the world stubbornly stick to the bankrupt idea that economic growth is driven by consumption. This is confusing cause and effect. Healthy consumption follows profitable production in excess of consumption, resulting in savings, accumulated capital that can either be spent without harm or invested in future growth. Consumption doesn't cause an economy to grow at all. To paraphrase, it's productivity that creates wealth. Stupid. Now that is a very profound statement by Doug Casey. It's, and I'll stop there, but it really is startling and incredible how many people don't understand that growth does not come from consumption. Growth comes from savings and productivity. It's absolutely startling because, as I pointed out in past episodes, we've hit a wall in the economy. The unemployment rate is still rising, even though it's not being reported. The youth are facing a potential 50% unemployment rate. The jobs just aren't out there. And of course, why would they be when the government is punishing savings in every way? There's no capital being created. So what you have to do is save, and of course the way you're going to save is in silver. We're rallying now, but it's still very cheap to buy at $32.34. Silver is still, in my opinion, the buy of a lifetime. If we did the math, it's how far it is down from its inflation adjusted high of 1979 at $49. I would guess that silver is probably down 80 or 90% from its inflation adjusted high of 1979. So that's an incredible bargain. It needs to move at least tenfold just to get even to its historical high, and a tenfold move and put us at $300. So it's still time to keep stacking, and we'll talk to you next time.